Morning, guys. Welcome back to my channel. If you're new, then again, we cover technical analysis on this channel. I try to point out the charts and the levels and where I think things are heading, and strictly looking at the charts from a technical standpoint. I do mix in some fundamentals when it comes to the macro economy. I don't get into the fundamentals around specific companies. I just believe that, I'm a technical analyst, so I believe that most of the information that you can find fundamentally is built into the charts. And yeah, there is some information that sometimes you can get, and if you do a lot of homework, you can get a leg up in fundamental analysis. But I think technical analysis just seems to work better for myself. So, all right, let's get into these charts. Triple Qs. Again, so here's something that it's a thesis that I've been, building or thinking about. And something I want to point out, the SPY here, you'll notice here on the SPY, let me go to the daily chart just to show you guys. The SPY has fallen a lot more than the triple Qs, and I pointed that out recently. But from the high, the SPY is down 35%, and the triple Qs is down only, let's see, it's down less. 28% is where it fell. So it fell a lot less. However, you have to understand triple Qs is tech stocks and a lot of momentum names in there, big tech names, and that's really where most of the money in the bull market was hiding out. Everyone was buying the FANG stocks going long, pumping those things up, and they had a huge rally. I mean, some of the biggest rally in the market during the bull market came from those FANG stocks. Now, the FANG stocks have held up pretty well, I guess, in this bear market or this crash. Just recently they were only down 17% from their highs. Or sorry, this is triple Q, but the FANGs make up a huge weighting in this indice, so that's why I just, for the most part, I see FANG when I look at this triple Q. And so this just tells me, yes, I look at this from a bearish kind of glass half empty stance. I'm interpreting the market from looking through a bear lens right now, and that's because all the charts are broken, basically. So I have to continue to look how to trade this market from the bearish side, selling the rips, things like that. What I see here, though, what I want to point out with these triple Qs is these things are outperforming. People are still hiding out in these. So a lot of money in the bull market had plowed into these FANG stocks and triple Qs, and now triple Qs is not selling off as much. People are hiding out. What I think that they're thinking is, and probably what a lot of brokers, and I know that brokers are telling people that the sell-off is related to the virus, and yes, it is. It got started because of the virus, but what's going to linger past the virus is the bear market and the recession. It's priced in, basically. I mean, we're going to have a recession, so. But people are hiding out in these FANGs thinking that they're immune to the effects of the virus. They're online, they're digital companies. They don't necessarily, get affected. But that's just a farce, basically. It's a fallacy. I mean, they will be affected. They make most of their money from advertising. Advertisers pull back drastically when in a recession, and that's what you're going to see. So. I think these FANGs and these triple Qs actually are perpetuating the slope of hope. That's what you'll see in a bear market, is a slope of hope. So you'll see people are hopeful. They think, and especially on the first leg down too. The first leg down, everyone thinks it's going to be a V bottom, just like it was here and all the other times we had pullbacks throughout the bull market. You get these pullbacks, and then everyone thinks, oh, that's either a dip buying opportunity or we're going to have a V bottom recovery. They always think that every time. And especially if you have a really long bull market, then it's worked in the past. It should work in the continue. That's kind of the mentality. But the reality is that I think is that, and that's the slope of hope that I see here. So you get this, you get the bull market rally. The next leg down is when everyone realizes that, all the people that were holding on to hope in these FANG stocks will realize that, it is not a continuation of the bull market. It is a bear market. But, unfortunately, by that time, it's you've lost a lot of money basically. So maybe it's not the bottom, but you've lost probably, it's probably the next leg down will probably be, over halfway to the end of the bear market. So, but that's kind of what I see. And I see these FANG stocks, everyone's kind of hiding out in these thinking that, oh, these aren't going to be affected. But in reality, I think they will be affected. And I think you're actually going to start to see Qs outperform to the downside. You'll see Q sell off more than you'll see maybe SPY sell off. That's the traditional setup, is usually Qs moves, up more and it moves down more. I think you're going to start to see that come into play. Once the market realizes that the virus is just the first initial shock, and then the recession and all the damage that has been done is, will linger around and continue to affect growth. And then you'll see these Qs start to outperform to the downside. So I just want to point that out. Let's go down to the chart here. Let's look at the hourly. All right, so here's what I got. I've got this downtrend line, and you can move it around. It could maybe be up here. I can't put it here yet because I only have 2 data points. Like I say, you need 3. So I only have really the top here, and then that would be that. So that's not a valid trend line yet. But it's something just to keep an eye on in case we do a little rally thing right up into here. Then maybe that is the 3rd data point. But for now, I'm going to leave the chart, this downtrend line right here. And what I see here, especially if we fail, and it could be moved maybe to the top here. It's anywhere right in here. But for now, we'll just leave it right there. If we fail and break down right here, then I see this right here as your false breakout, and that's what you'll see when you're trending. You're going to have these moves where you start to break out. People think it's a breakout, and then it's a fake out. So the larger trend is down. Continue to just keep that in your mind. The bigger trend, the bull market is broke. All the trend lines in the bull market are broken. So the major trend lines. I mean, if you're new to the channel, I'll show it again. I showed a lot, but it's been a while. But all right, here's your S&P 500. This is your bull market going back the last decade. See the trend line? Lots of reactions around this purple line. Nice clean up trend line. We broke that back in 2018. That's when this channel pretty much came out, and that's when I started saying, look, I'm a bear because of this. Then we back tested all of 2019 and a nice impulsive failure, huge volume. Okay, so the bull market's broke. And we broke this in 2018, and Qs broke its uptrend line in just recently, this fall, and that's this red line right here. So we broke it, and I think we're heading lower. So everything on this channel is going to be from a bearish standpoint. So I think this is a false breakout. So the bigger trend is down. And so you want to keep that in your, when you see breakouts, you don't want to trust them. Never trust a breakout in a bear market. You can trade it, but you just want to make sure that you're quick to, get out of that trade. I mean, I was long, recently when we came down to here, I put out a video saying I think we're going to gap higher. And I had long positions, and we gapped up. I hit a target. That was this purple line right here. I took my profit, and I was done. The market kept rallying, and I was okay. I want to hit that first target. That's the highest probability target, the easiest kind of a base hit, basically. Once it gets past that, you start getting into more and more risk. I don't want to be on the long side, getting farther out on the risk scale in a bear market. So I can be long in a bear market on a bear market rally, but I usually will cut my, I take that first target. I take profit on that first target. Maybe the second, but for the most part, I don't let things just run. And so I think we head lower now. Maybe it's not today, but ultimately I think today we probably park it right around 182.50. I don't know. Somewhere right in there we park it, and then next week we'll see. probably a resumption to the downside. That's how I see Qs. That's how I'm trading it. I did take this trade today, this Tesla trade. Took it as a day trade. And basically I saw in the news they reported earnings, or they reported deliveries, and it was great, and the market was, Tesla was up like 15%. I saw that in the after hours yesterday, and I was like, all right, that's definitely a good candidate for a short. I want to short an automaker, whether you think it's an automaker or a tech company, it doesn't really matter. I want to short a momentum stock, which that is what Tesla is a momentum stock. People jump on and buy Tesla just because it's moving higher. And yeah, there are people that believe in the company, and there's people that don't believe in it. That doesn't matter. People buy the stock because it moves. It moves around. So, and it's been a momentum name. So, I want to short a momentum name moving higher in a bear market. That's kind of my, that's the first thing that passes, my first filter. That checks that box. So then I woke up and I looked and I marked out the level I could find, and the level I found right here was this 515.36. That's basically where I marked it out at. And I went back. You can see we held that. Look, we gapped right there, okay? And then moving in, here's where it held as support, and then we gapped below, came back up, it held as resistance, it was then support, then resistance. Lots of reactions around that level, so I figured, okay, that's our level. And when I woke up this morning, it opened, let's see how it behaved. Yeah, it opened at like 506, and I wasn't really interested in shorting it there. That just wasn't close enough to 515 that I was looking for, so I waited, and then we did get this little pop right up here. It doesn't show that good. Let me see if I can... It's not showing on this chart. Let me see if I can pull it up on my other charting platform. Yeah, I don't know why it doesn't show up, but here's the 1 minute chart on Lightspeed. And so it opened, let me zoom in. It opened like right here, and it was chopping around. I didn't want it right there, but then I saw this ramp right here, ran right up into 515, 515.70, got short right there, and I rode that down. I covered that down around, where did I cover that? I think on this down spike right here, I covered that. So just not a huge trade. I wasn't really looking for a huge trade. I honestly don't like to trade Tesla that much. It's just really choppy. But that was an opportunity that was pretty obvious, so I figured I could take a shot there, and that one worked out. So the point is, when you see momentum names gapping higher, making a big move, and try to figure out, and read why they're gapping up, and then analyze your levels, and then anticipate what it's going to do. If we're in a bear market, we're probably going to sell off. People are going to take their profit on a 15% up day in a momentum name, and you get an opportunity to get out of some of your shorts. Yeah, I would definitely do that. And Tesla went parabolic and then crashed the same amount. So this is like an opportunity for anybody that was long here, and they took all these losses. You gap up, you start moving up. It gives people an opportunity to, get out of some of those losing trades at less of a loss. Also, shorts are just looking to jump on and pile on top of this thing, which is what I did. All right, so that's that. And then that was the support. It was 475. So I suspect we'll probably tag it sometime today, maybe even go lower. Let's look at Apple. So here's your plateau on Apple, 237.70. If we break that, heading lower, I think we break it. That's my take on it. And then to the upside, I really see it. I mean, ultimately, this is your 283. That's kind of your best entry for a short position on Apple. I don't know if we'll ever, if we're going to get back up there before we go lower, but those are your levels I see. 237, call it just 237, and then way up here at 280. Anything that, I'm not really interested in shorting it unless it breaks below or gets up around here. So again, we're looking for the bigger picture. But you did have your tag of that level right here. You can see that candle. We already tagged it. It rejected. and then sold off. So I think we probably work our way lower now in Apple, which is congruent with my thesis on triple Qs, and I think triple Qs is going to sell off as well. LQD corporate bonds. So this one you want to keep an eye on because, and sorry, my charts got jacked up last night, so I have to remark out my levels. But they're not that difficult to see. This is one you want to keep an eye on. So right now we're just grinding around in this range right here, towards the bottom of the range. I think we break, and I think we head lower, and ultimately probably going to undercut these lows. So that's the trade that I'm positioned for. I do have this. I'm short this LQD, and I think we at least retest the lows, probably break. The Fed's in here now. They've kind of tried to get a handle on this one, so this might not be as good as like triple Qs. The Fed can't buy triple Qs yet, but they are in here buying this LQD, and so maybe we don't actually do a full test. Maybe this just sells off and comes close. Maybe something like this. Maybe that, but. I still think that it heads lower from here, so we'll watch that and let that continue to play out. Another thing I want to point out, gold's holding up pretty nicely. Let's look at gold bullion. Nice and strong. This just looks really strong to me. You have, you've got this level 1570. We just recently tagged it right here. Came down, sold it, tested it, undercut just a little bit. That's okay. But didn't get an hourly close below there, so it's just that's the stop rate, and then going higher. Tagged it again, couldn't even undercut it that time. Buyer stepped in right then, and then we're moving higher. So you can just see. I mean, look, you've got. Now this is short term, but you've got higher lows, higher lows, higher lows. Higher highs, starting to break. So I think we go higher, and that's just short term. If I go to the daily here. You can see, I think this was your flush out move. This was the move. This was the move that you also saw this kind of a move in 2009, but I suspected we weren't going to get a repeat of what happened in 2009. In 2009, if I roll out, show you guys, I got to go a ways back to show you, but where is it? Right there. So 2009, this was your Great Recession. Gold sold off from the high down to the low about 33%, and then the miners sold off, even more. But I suspect, I kind of suspected that they're not going to do the same thing. They're going to make it seem like it's repeating the same kind of thing, but then people see that what happened in 2009 when it sold off 33% and then was followed by like 150% rally. People see that, they know that's what happened, so people step in early. They as it's falling, say, hey, this is buying opportunity. It's going to be followed by a huge rally, so they step in early, and that stops the fall. So this one only fell 14%, almost 15% to the lows, and then the buyers have stepped in. So we'll see if this continues, but that's my theory that people stepped in early thinking, anticipating the big rally to come, and so it just didn't even fall. Now, that doesn't mean we're guaranteed to get a big rally either, but I'm just saying that's what the chart tells me. And the chart also tells me bullish, we're in a bull market. Higher lows, higher lows, higher lows. This is a weekly chart. You can see higher lows, higher highs, nice breakout move. Should move higher, so that's what I see in gold. I think we're making this is a longer term bull market that could last, 3, 4, 5 years. Who knows? But I think it moves higher over that period of time. So that's how we're positioned. Let's look up Barrick Gold, and then I'll wrap up this video. Yeah, so Barrick Gold's got resistance right here at 2020. Ran up and tagged it. Really good day in miners yesterday. Huge gains for myself. And anybody else, I guess, who's owning these things. But we got resistance right here at this 2020 looks like we're doing a little flag action, short-term flag. You can see, you know, here's your little flag pole, and that's funny. And then you've got, sorry, grab this. It's a tiny, not a very big flag, but it's a flag like that. So probably a break higher. I don't even want to mark it out because it's so small of a pattern. But when I look at this, it's bullish. You know, go back to the weekly chart. Same picture as gold, really. You've got, here's your bear market, and then here's your bull market that we're now in. You've got higher lows. You know, here's a flush out move that you know, was countered. I mean, basically a V bottom. You can see big flush out move. I use that to add to my position, and you know, V bottom's moving higher. So what we need to see is a break above this 2250, break above 2250, and a nice solid close above that. Really 2264, because that's our gap. There's a little gap on the weekly chart right there. That well, never mind. That gap was filled. There's your gap fill right there. So that's why, you know, we filled the gap and then sold off. So now we've done that move, a break above this 2260. That puts us in play for, you know, a lot higher prices. But I would say, you know, $32. We've got $27. We'll mark 27 out. That looks like the next level. Right about there. 27, $28. Somewhere right in there is our next profit target, or our next target for this up move. All right, that's all I got. Again, oh, the final thing. Gold that I'm starting to notice is gold starting to move higher. Let's go to the, you know, gold's actually starting to move higher and hold strength, and the indices like triple Qs and the SPY are starting to show weakness, and that is different than what we just recently saw. When we had the big sell-off in gold recently, right here, the markets were selling off too. This is when the markets were plunging and gold plunged with it. But now we're seeing gold do what it's kind of supposed to do, which is protect you or be an inverse trade to the markets. And so we're seeing gold hold strength and move higher. I mean, you can see, look at the gold miners, you know, up 1% today. And if you look at Qs, down 1%. So we're starting to see that trade, that inverse trade work out, where miners and gold are moving up when the indices are moving down. And that's exactly how I'm positioned. Basically, is I'm positioned, you know, short triple Qs, long gold miners. That is kind of my major thesis trade. So just want to call that out. We'll see if that continues, but I'm seeing it today, and I wasn't seeing it previously. What I was seeing is gold miners and gold was selling off when the indices were selling off too. So they were selling off together, but now they've started, today at least, they've started to break that trend and starting to trade as expected, which would be gold up and you know, triple Qs down. All right, that's it. That's all I got. Let me know if you guys want me to look at any other charts. I'll try to put those out in a video either tomorrow or this afternoon. If anything major happens, we get some sort of major sell-off, I'll put out a video at the end of the day. But I've given you guys the levels I'm looking at and get you guys prepped for maybe what might happen. So let me know what you guys think. Give me a thumbs up. Subscribe if you're new. Catch you guys on the next video.